Lindsay says, I am 46 years of age. Am I better off putting any extra money into my super or into my mortgage? Yeah, you're getting to that stage where I might pick up a... It's a good question, and it's a really interesting one. How much should I focus on ploughing money into my super versus ploughing money into the mortgage? Generally, we say focus on the mortgage. But if you're approaching the age at which you might access your superannuation money, and 46 is probably on the younger end of the spectrum, but depending on your scenario, it could start to salary sacrifice a little bit. And the way that I like to communicate this one is that if, for example, you are earning close to one of these tax thresholds, so these are the income tax thresholds. If you're earning up to $80,000, your marginal tax rate is 32.5% plus the Medicare levy, so 34%. If you're earning $90,000, for example, and can afford from a cash flow perspective to forego $10,000 of your income, then if you salary sacrifice that money, you would save the difference between your marginal tax rate, so 39% including the Medicare levy, and your 15% contributions tax rate. So for the $10,000 that you're salary sacrificing, you're effectively saving 24% of that money. So $2,400 you're saving by salary sacrificing. If your cash flow allows for it, you could start to salary sacrifice a little bit. You potentially wouldn't salary sacrifice the maximum $35,000 depending on what your income level is, but you might start to sacrifice to keep yourself under the limits that you're close to, for example. I hope that answers your question there, Lindsay.